Well, a crazy update in the stock world coming up. NIO stock has been in the headlines lately, and everyone has an eye on it, as it is the Chinese EV the government of China is giving special focus to EVs lately, and the biggest competitor, obviously, Tesla. Well, welcome back to Stock Market News, you all. Today we'll talk about what is happening with NIO currently and all the stock-related news. You will get it on our channel, so without any delay, let's dive into the video. But before that, please hit the bell icon and subscribe to the channel to get every single update about the channel. As a result of Beijing's consumption incentives and substantial dip buying from investors, the stock prices of China's electric car manufacturers are now outperforming the worldwide market leader, Tesla Inc. Over the course of the previous month, the American depository receipts of NIO Inc., XPeng Inc., and Li Auto Inc. have all increased by at least 64%, placing them among the top gainers in Chinese equities that are listed in the U.S. The significant uptick in price indicates an improvement in mood, which has been in a downward trend for several months due to concerns around excessive valuation and supply constraints. Their gains easily beat Tesla's 17% advance, which was weighed down by divergent policy outlooks in China and the United States, as well as investor jitters over how Elon Musk will fund a potential deal to acquire Twitter Inc. The EV giant's share price was negatively affected by these factors. Throughout Shanghai's shutdown, the electric vehicle sector in China struck a low point, as not a single vehicle was sold in the city during the month of April, and facilities were either forced to shut down or work under extreme limitations. Since then, the authorities have introduced a variety of stimulative measures in an effort to resuscitate the industry. These measures include subsidies, an increased quota for auto ownership in Shanghai and Guangdong, and the possibility of extending the purchase tax exemption for new energy cars. Andy Wong, who works as a fund manager at LW Asset Management Advisors Limited in Hong Kong, stated that there are fund flows that are buying the drop and catching the sector's bounce. Despite this, he pointed out that the short-term upside potential has shrunk as a result of the recent spike. Despite the fact that the company has made significant progress in terms of its production in China, Tesla's share price has been extremely volatile and is currently trading at a level that is around 36% lower than it was in April, when the quarter's high point was reached. The impending layoffs at the U.S. manufacturer, the uncertainty surrounding Musk's contract with Twitter, and his most recent statements about new plants in Germany and Texas losing money are all contributing factors that are holding the stock in check. The performance of the market is also symbolic of the different growth and policy outlooks in China and the U.S. As of this point in the year, the NASDAQ Golden Dragon China Index has performed nearly 18 percentage points better than the broader NASDAQ gauge. This is due to the fact that Chinese companies are anticipated to benefit from policy stimulus, whereas their U.S. peers are expected to suffer as a result of aggressive monetary tightening and fears of a recession. Despite this, investors are looking for further catalysts that might keep the trend going after such spectacular increases in China's electric vehicle stocks. The 14-day relative index for Li Auto is currently at 84, which is significantly higher than the threshold of 70, which some investors consider to be an indication that the company has been overbought. The readings for XPeng and NIO are likewise in the vicinity of 70. As China's economy continues to make a slow but steady recovery from the harm caused by the COVID-19 lockdowns, improving delivery data provides some cause for optimism. The Chinese company Li Auto, which has the greatest market capitalization of the three, shipped 11,496 units in May, which is an increase of 176% from April and more than double the amount from the previous year. In a note that was published earlier this month, an analyst working for Sunhua Kingsway Capital Holdings Limited by the name of Eason Cui stated that looking forward, we think catalysts would need to come from earnings and the economy improving, because the majority of the good news for the Chinese auto sector has already been priced in. NIO shares have been under pressure as a result of growing anxiety over the possibility of lockdowns in China to prevent a fresh wave of COVID-19 infections. This includes the province of Anhui, which is where NIO's manufacturing facilities are located. But there was another factor that contributed to today's rise in share price. It would appear that the Chinese government is reiterating its commitment to the promotion of new energy cars, such as plug-in hybrids and battery electric vehicles. In a recent release, the Chinese Ministry of Commerce voiced its support for the nation's automobile manufacturers, as well as the purchase and selling of previously owned automobiles. According to Barron, the notification also stated that incentives for automobiles powered by alternative energy sources will be extended. This is excellent news for NIO and the other Chinese manufacturers of electric vehicles, which are now working to recover from production delays brought on by the recent lockdowns linked to the epidemic. Because of the lockdowns, NIO's supply chain was disrupted and the company was only able to deliver 12,098 automobiles during the months of April and May. However, the business was able to make up for those delays in the month of June when it completed more than 12,900 deliveries all by itself. Strong demand for electric vehicles has been stoked by government incentives in China. However, their value has been steadily deteriorating over the course of time, and they were due to expire this year. NIO, which has been working hard over the past year to more than quadruple its manufacturing capacity, would view an extension as a very positive news. In addition to the financial assistance, the government has indicated that it would actively encourage the building of charging facilities and will make efforts to bring down the expenses associated with charging. The market for automobiles in China is now the largest in the world. The fantastic news that further help would be provided to continue the growing demand for electric vehicles is fantastic for NIO, and this has investors seeking to buy shares today. In reaction to recent developments in Beijing that drove electric car stock values to rise, the Chinese government has reiterated its commitment to the domestic auto sector. NIO and its competitors benefited from the Chinese government's intentions to provide incentives for consumers who buy domestically built new energy vehicles. Investors were also happy to discover that despite ongoing fears about COVID-19, no announcements have been made about the likelihood of a lockdown in Anhui province, which is home to the bulk of NIO's production units. Following the announcement on Thursday, shares of XPeng, Li Auto, and Tesla all traded much higher. This week, NIO made many announcements, including the completion of its 1 million battery swap station. Furthermore, the company said that it has completed construction on its 1,000th battery exchange station. Investors who were alarmed by brief research conducted by Grizzly Research that specifically targeted NIO's battery swap services are delighted to hear the good news. Since the information became public, investor sentiment toward NIO shares has been overwhelmingly positive. June proved to be a far stronger month than expected, with deliveries climbing by 60% year-on-year. Some analysts have been bullish on NIO in recent weeks. NIO is approaching its most significant product cycle ever, according to Deutsche Bank analyst Edison Yu, and the ET7 and ET5 sedans will become the most desired premium electric vehicles in China. Grizzly Research, a short seller, believes NIO is misrepresenting its sales estimates, but investors are no longer listening to pessimists. NIO's delivery growth was particularly strong in June, and with the Chinese government recently announcing plans to help the EV industry by increasing subsidies and building comprehensive charging infrastructure, NIO's expansion prospects have begun to seem even brighter. Please note that this video is merely a source of information and does not promote any type of promotion to stock. If you are interested in acquiring stock, we ask that you conduct some research on the stocks listed. And make sure that you hit the like button as well as the subscribe button so that we may continue to develop more content related to information and updates on NIO stock. Thank you so much for watching our video. We hope to see you in the next one. Thank you and goodbye.